9 out of 10 people who go into trading never make any money. And it's not because they're not smart enough. It's because every expectation they had going in was wrong. Wrong numbers, wrong timelines, wrong idea of what it actually takes to quit their job and trade for a living. And I know because I made every single one of those mistakes before I figured it out and reached $2.5 million in funding. So before you bet your job on this, let me give you a real answer on whether trading is actually realistic for you or whether you should look for a different path. Spend enough time on social media and you'll start believing huge returns are normal. 50% monthly returns, 100% monthly returns, accounts tripling in days. And because it's everywhere, you naturally start assuming that's what good traders do. And that's not just misleading, it's actively giving people the wrong idea of what trading actually is. And that makes trading feel completely unrealistic for a normal, everyday person. This is a £1 coin. To double this quickly, I need to risk all of it, or the majority of it, on a single outcome. If it goes right, amazing, I've got £2. But how many times do you think I could keep doing that before I lose it all? Once, twice, maybe 3 times if I'm lucky? That is exactly what the influencers on social media are showing you. Taking massive risks, doubling accounts, making it look repeatable, when it isn't. Eventually a loss will come and along with it, your entire account balance. Now watch what happens instead of trying to double the £1 coin, I just focus on steadily increasing its value. Instead of risking all of it, I risk just a little, and as I win, I make a small return, month after month. Nowhere near as glamorous, but boringly consistent and far more profitable in the long run. So the reason those huge returns are unrealistic isn't because they're impossible, it's because they're unsustainable, and they're closer to glorified gambling than genuine trading skill. And if you're taking trading seriously, like as an actual way out of your job, your goal isn't to get the biggest return possible. It's to make returns you can repeat next month, and the month after that, and the month after that. And once you understand that, the question moves from how do I make the most money as fast as possible, and becomes what return can I actually achieve and then sustain? And the answer to that is simpler than you'd expect. So if chasing massive returns is off the table, what can we actually expect from trading? Well, let me show you something. This is a monthly profit leaderboard from a trading firm. There are tens of thousands of funded traders in this firm. And I don't mean demo traders, I'm talking funded traders, proven traders, many of whom are full-time traders. These type of leaderboards are generally considered to be where some of the stronger traders in the industry end up. But if you take a look at some of the returns they're making, you'll notice something really interesting. The vast majority of these successful traders are producing very, very modest returns. And speaking as somebody on this very leaderboard in 9th place, I'd say I have a fairly good understanding of the type of realistic returns you should be aiming for each month. And that is around 2 to 6% a month. Okay, that's it. That's the general target for a competent trader. You seriously do not need to be exceptional. Average to good is enough because the bar really is that low, which is exactly what makes genuine trading far more attainable than most people realize. But here is the obvious problem with all of that. A 6% return on a $1,000 account is $60 a month. That's barely enough for a restaurant meal these days. So if the returns are so small, how do traders turn them into a full-time income? The answer to that question is, for me, the single most important lesson that way too many beginners and even experienced traders never really understand. So instead of explaining, let me show you. I just showed you this leaderboard. Okay, great. Now take a look at this one. I'm in 18th. 2 different months, 2 different firms, 2 different returns. A 4.9% return, the other over a 10% return. Simple question for you. Which one was better? Which one would you rather have? Almost everybody would pick the month with the better return. After all, 10% is better than 5%, right? Wrong. Everything changes based on the account size that you're trading. Despite producing less than half the return, the account may nearly double the money. Why? Because the account was quadruple the size. And this is the lesson. The larger your account size, the more lucrative those small monthly returns become. To the point, they don't just replace most salaries, they exceed them. That's why the traders making a living from this aren't usually obsessed with generating bigger and bigger returns. They're focused on getting access to more capital. Because once you're producing realistic, repeatable returns, account size becomes the single thing that moves the needle the most. And that's why trading can absolutely become a realistic way to quit your job. Not because you're making extraordinary returns, you're not, but because you're applying ordinary returns to a meaningful amount of capital. And that leads us directly into the elephant in the room. I don't have $100,000 or $200,000 to put into trading. So how does any of this apply to me? That's one of the most important parts in this entire video. And I'll show you exactly how I managed to get over $2.5 million in funding, all whilst being a broke delivery driver. Proprietary trading firms, prop firms for short, is how the majority of full-time traders, including myself, get access to such large capital. These firms provide this capital only after you've proven you can trade consistently. So you pay a one-time fee to take an evaluation for accounts, could be between 200K all the way down to 5K accounts. You hit the profit target and the account becomes yours to trade from then on. You then get to keep around 80% of whatever you make each month. That all sounds amazing, and it is. But there's a right way of going about this and a wrong way. Depending on which one you pick, decides whether it's actually going to be realistic for you to leave your 9 to 5 through trading. Let me explain. Think of prop firms like a gym. Gyms give you access to all the equipment you need to become incredibly strong. But imagine an average person walking on day one and loading 300K onto the bar. That's not going to make them stronger, it's going to crush them. The people who eventually lift the heaviest weights start with a weight they can actually handle, then gradually increase it over time. And as a result, they actually get strong. So just as the average person's body is not used to a 300K bar, the average trader isn't emotionally ready for a $200,000 account. Not because the trading is different, it's not. The charts are the same, the strategy is the same, but the difference is the pressure. A $200,000 account starts to represent certain things. Quitting your job, making real money, changing your life. And the moment every trade starts carrying that type of weight, traders begin doing things they normally wouldn't. They hesitate on valid setups. They close winners too early. They interfere with positions that should have been left alone. You will fail and you will fail trying to do something you're not yet ready for, whilst burning money through evaluation fees as well as time from never progressing. And that's why most traders get stuck here, never being able to quit their jobs. So do not choose your account size based on how much money you want to make. Choose it based on what you can comfortably handle. Your first account should carry very little emotional significance. Passing it shouldn't change your life. Failing it shouldn't devastate you. So start with a weight you can actually lift. Pass it, get paid, move up, then repeat. Little by little, your account size grows. Alongside it, your confidence and your results. That's how prop firms are supposed to be used. Not as a shortcut to life-changing money, but as a vehicle for steadily acquiring more and more capital. And if you approach them that way, like me, I progressively took less and less delivery shifts until I flat out quit and took trading full time. So the career path is right there. It's achievable, it makes sense. But can this work for you specifically? Or does it take a certain type of person? Truthfully, I'd love to sit here and give you the 5 traits that guarantee someone becomes a profitable trader. But I can't, because I don't know. Most people think becoming a trader depends on things like intelligence, a finance degree, or some deep understanding of economics. But in my experience, none of that makes a difference. The traits that ended up mattering most for me were completely different. So instead, I'll tell you the characteristics I personally had to lean on the most, or in some cases develop from scratch, in order to make trading a reality. The more of these you already have, or are willing to develop, the more suitable I'd say trading is for you. Logical problem solving. I've always enjoyed strategy games, chess, the tactical side of sports, and trading is very similar to those. It's essentially a giant feedback loop. If something isn't working, you identify the problem, you fix it, and then you repeat that. Getting emotional about problems won't help you in trading. Conviction. Trading gets difficult. You'll have moments. I still have them. Periods where it's really easy to question everything. Your strategy, your analysis, yourself. You need enough conviction to not throw everything away the moment things get difficult. Otherwise, you'll spend years jumping from strategy to strategy, never sticking with anything long enough to see results. Decisiveness. I'm not even that decisive as a person. I don't even know what to eat half the time. But trading forced me to be able to turn it on because at some point, analysis has to become action. Enter the trade or don't. Hold the trade or don't. Close the trade or don't. Hesitation is often just another way of avoiding responsibility for a decision. Accountability. It's so easy to blame other people in trading. I mean, just load up social media and you'll see somebody pointing fingers at somebody else for trades they themselves have made. Blaming the brokers, the prop firms, the market, everyone but themselves. You have to be able to just own up and just say, fair enough, yeah, that's my fault there, I'll watch out for it next time. Because once something becomes your fault, it also becomes something you can then fix. Resilience. Trading has long periods where you're putting in effort and you're seeing absolutely nothing in return, especially while you're learning. You'll be doing everything right and still nothing. If you quit every time progress slows down, chances are you'll never get to see the good part. So can you do this? At this point, you'll know the answer to that better than me. But just know, regardless of background, anyone can become a trader. Some personality traits can just give you that extra boost. And that leaves us with one final question. What exactly do you need in place in order to make that step into trading full time, where you're physically handing in your resignation letter for your job? This is where a lot of people make a huge mistake. As soon as they start earning money from trading, they get ahead of themselves. They start entertaining the idea of quitting their job to go full time before they've actually checked whether they're ready. Your bills, they don't care if you've left your job. They still need paying. So before you make that decision, let's get realistic about what actually needs to be in place first. Imagine I handed you a parachute and asked you to jump out of a plane. You'd have questions, but the most important one for your survival, does this parachute actually work? Realistically, you wouldn't just check one strap and then call it a day. Before actually jumping, you would check everything. Is the parachute packed correctly? Are the straps secure? Is there a reserve parachute in there? You'd want all of that confirmed before you jump, because the moment you do, the clock starts ticking. You only have so long before you hit the ground. Quitting your job works the exact same way. The only difference, nobody's asking you to jump. You're choosing to, which means you have the time to check everything first. Use it. Before ever quitting your job, you want these 4 things in place. Number 1, know your monthly baseline. What does it actually cost you to survive each month? Rent, food, car, bills you couldn't afford to cut even if you had to. That number is your floor. Your trading needs to exceed it consistently, not occasionally. 2, are you consistently hitting 2 to 6% a month? The odd month where you fall short is completely normal, but for the most part, you should be hitting the target more often than not. Consistency here is everything. One good month is not enough. Number 3, is your account size big enough? Take your monthly's essentials figure and take your account size, and let's just say you hit 2% each month. Is that enough to cover the costs? Your total funding should cover that. And it's actually best to go one step further here, where you have multiple funded accounts to make your monthly target far more likely, even if one account has a down month. Number 4, do you have savings? At least 3 months of essentials sitting untouched, more if possible. That cushion doesn't just protect you financially, it lets you trade with a clear head. The moment you're trading to pay next month's bills, your decision making, it suffers. Okay, the savings remove that pressure entirely. Get those 4 things in place and trading starts looking like a genuine, sustainable replacement for your job. If you ignore them, then you're jumping first and checking the parachute on the way down. So, is trading actually a realistic way to quit your 9 to 5? For far more people than you'd expect, the answer is probably yes. The path itself is very achievable than most realize. If you want to see the single trade that I was taking, which allowed me to quit my Uber Eats job, that's on screen now. If you've got any other questions, leave them below and I'll do my best to help out.